The government today released inflation data for August 2022. The markets didn't react very well, as we'll see in a minute. But for today's video, the big question is, what does this tell us about I-bond rates that will be reset this November? Hey everybody, my name is Rob Berger. This is the Financial Freedom Show. Today we're going to look at that. We're going to actually do some calculations. I'm going to give you my estimate of where I-bond rates will fall this November, and I'll also give you some strategies on how to think about when to buy I-bonds given the information that we have so far. So let's get right to it. Let's start with the inflation numbers. This is from the Bureau of Labor Statistics. The BLS is part of our government that releases this data, and they've given us a nice chart to look at. We've got all items right here. So on an annual basis, CPI has been up 8.3%. Obviously still a very big number. I think the market was expecting 8.1%, so it surprised some folks. So 8.3%. They break it down into categories. So we can look at food, for example, 11.4%. Obviously very, very significant. Food, a very important part of the CPI calculation. Energy year over year has been up over 23%, very significant. And that's true even though in the last month or two, as we've probably seen at the gas stations, prices of gas have come down at least somewhat, but still on an annual basis, inflation is up significantly. And even if we exclude both food and energy, which can be very volatile, and we look at this one, all items less food and energy, 6.3%. So we still have quite a bit of inflation, which of course goes back to Jerome Powell's last speech at Jackson Hole, Wyoming, where he made it clear he's going to do everything he needs to fight inflation. And with these readings, I think what the market is thinking is, yep, Jerome Powell's going to keep raising rates. We don't see an end in sight, at least at the moment. And in fact, the markets did react. As I record this, we can see the S&P 500 down 3.15% today. The Dow's down about 2.75%. And look at this, the NASDAQ down over 4%. And if that weren't enough, Yahoo Finance was kind enough to give us a picture of I guess that's a trader who's not having a very good day. So yes, we've still got inflation, unfortunately. It's certainly not showing any signs of subsiding. But for our purposes, it can help us predict what the inflation rate will be. Now, before we get into the calculations, I want to make one thing clear. For I-bonds, there's sort of a fixed rate, which is currently 0%, and then there's an inflation-adjusted rate. My focus is the inflation-adjusted rate. We won't know what the fixed rate is until that gets announced in November. My prediction is it will stay at 0%, but we won't know for sure, of course, until then. We do have a pretty good picture, though, on the inflation adjustment, and that's what I want to show you. So let's turn to that now, and I'll show you how that works. The BLS website, here we are, and this is just some data that I've pulled up, and we want to focus on this bottom row here because this is 2022, and what we have is the August number. That was what was released today, September 13th. What we'll need to actually calculate the final inflation number is September, so we won't get that until next month. So we've still got one more month of data. We'll talk about that in a minute. But we can at least calculate what the inflation rate would be. Let's just assume that the September reading is identical. It's not a bad assumption. If we look at the August reading, it's very, very close to the July reading. So let's do that right now. We're going to take the August reading, 296.171, and we're going to subtract the March reading, 287.504, and that gets us a little over 8.6. And now we want to use that to determine the percentage change. So we'll simply divide that again by the March reading. And that gets us just over 3%. Now remember, that's in this case a 5-month change. We're assuming that the September inflation rate stays the same just for purposes of this calculation. So this would be a 6-month number. So to get the annualized rate, we would simply multiply it by 2. And we get, we'll call it 6.03%. Now, that might be disappointing for some. Right now, we've got 9.62%. And so certainly a 6% rate would be a significant drop, but still, as a risk-free investment goes, probably the best thing out there, certainly the best thing that I can find. Now, all of that raises the big question, though, what will the inflation reading be next month? Of course, the shorter answer is we don't know, but I will show you this. We can break down the current inflation numbers. Here it is. we looked at that all item number in the chart, but what I like to look at is the various components that make that up. And we can see here, for example, energy overall was down 5 points, energy commodities 10, you can see that. And this right here, 10.6 is gas, and 5.9 is fuel. So again, year over year, those are still have been up significantly. But on a month-to-month basis, they have been down. And again, we've seen this at the gas pumps. We've seen the prices come down. And that really is the one saving grace, at least in terms of the inflation reading. We can see other numbers, like look at the food number, just in 1 month up 0.8. That's a very significant jump. And if you extrapolate that over a year, well, you're looking at a really big number. Even the food at home, which, you might think, well, away from home, you expect it to be more expensive. But even food at home has gone up significantly. And so that raises the big question. I think the big unknown is what energy prices are going to do. I think if they stay the same, or maybe if they continue to fall, we'll see, then I would suspect, I would predict an inflation reading roughly in line with what we have. I wouldn't expect it to be significantly higher or lower next month, which would put the inflation rate somewhere around 6%. Keep in mind, that really is just a best guess, but what I am really confident about, two things. One, we're not going to see another 9.62%. It's going to be significantly lower than the current rate. I also don't think it's going to drop significantly below 6%. Again, that's just my best prediction, but based on the data that we have so far, I think that's a reasonable prediction. So it's going to come in somewhere around 6%. So what does that mean? Well, if you haven't bought I-bonds yet this year, I would buy them before the rate changes in November. You want to lock in the 9.62% rate that we have right now. Remember, it doesn't matter when within the 6 months you buy it. If you buy it and the 9.62% rate is effective, you'll get that for a full 6 months. And then when that 6-month period is over, whenever that is, could be in 2023, depending on when you buy the I-bond, you'll get the rate that's set in November. Again, I'm going to guesstimate it somewhere between, my guess would be somewhere between 6 and 7%, but I don't think it's going to be too far from 6%. Again, certainly don't think it's going to be 9.62%, I'm afraid. However, as I've said, I think even a 6% interest rate on a guarantee, not only a guaranteed, risk-free investment as you can have, but one that's adjusted for inflation as well, is still a really good deal. So there you go. That's my take on the I-bonds and what we can expect from the inflation rate come November. And if you have any questions, leave them in the comments below. Be happy to help you out any way I can. Until next time, remember, the best thing money can buy is financial freedom.